Hi and welcome on Sifter Fund's April monthly review. In this presentation, we will cover three topics. Firstly, the fund's performance. Secondly, the biggest contributors and detractors during the month of April. And finally, we will introduce you one Sifter company we've been investing in. The fund's share price has increased quite rapidly in the first months of the year. Also in April, the fund's share price continued to rise, but with a moderate pace. Year to date, the fund has returned 14.11% after all fees, and in April, the fund increased by 1.3%. It's good to note that the fund is not managed against any selected benchmark, but we can still compare it to the market returns. In this case, the MSCI All-Country Weighted Index. During the first 4 months of the year, Sifter Fund has outperformed the market by just over 3%, which is a good news for investors. Let's review the fund's top contributors and detractors during April. The top contributors of the fund companies were Alphabet, S&P Global, and Verisign. Correspondingly, the largest declines in share prices were seen in three companies: Nitori Holdings from Japan, Canadian National Railway, and also Japanese company Koito Manufacturing. In our view, these changes in share prices in the short term do not give any reason to us to make changes in Sifter portfolio. The business's outlook of all of these companies are on fairly solid footing, and we still believe they will succeed in the future. Next, we will take a closer look at one of the largest investments in Sifter portfolio. It's a Swedish company called Atlas Copco, and our analyst Olli will present it for you.
Atlas Copco is a Swedish industrial company. We invested in Atlas in August 2019. About half of the company's revenue originates from its compressor business, and these compressors, they are typically large industrial air compressors which power manufacturing equipment across a factory by providing them with compressed air. The second most important source of revenue comes from vacuum pumps, and they generate about 1/4 of Atlas's revenue. Then what kind of a company is Atlas Copco more generally? Well, you could call it an old and stable industrial company. The company was founded more than 140 years ago, and there are at least three factors which support its stability. First of all, 1/3 of revenue originates from services, and these services essentially stabilize Atlas's revenue through economic cycles. The company also earns revenue broadly from different kinds of industrial customers, even though the vacuum business has an overemphasis on electronics and the semiconductor industry. Third, in terms of geography, Atlas also generates revenue in a balanced way. Roughly 1/3 of the revenue originates from Americas, 1/3 from Europe, 1/3 from Asia. Now, these are all positive characteristics for a company, but they are not really the primary reason why Atlas caught our eye. What first caught our attention were these four key things. We first noticed that Atlas has a remarkably high and stable operating margin for an industrial company that sells capital goods. The margin is marked with a yellow color in this chart. Second, we noted that the company also generates very healthy returns on invested capital, even during weaker years. And actually one reason for this is that Atlas's business is quite capital light. So Atlas has outsourced a large share of its manufacturing, except for the most critical components and the final assembly. Third, after comparing Atlas to its competitors, we realized that Atlas generates exceptionally large amounts of revenue from industrial compressors and vacuum pumps, and the company indeed has a strong focus in those areas. Fourth, Atlas has superior financial metrics compared to most of its relevant competitors. One such competitor is the American industrial company Ingersoll Rand, for which compressors and vacuum pumps are important products. The company is also Atlas's key competitor in many cases. The upper half of this slide shows how Ingersoll Rand has consistently underperformed Atlas in terms of operating margin and returns on invested capital. Second, I would like to point out the down left part of this slide where you can see that Atlas is indeed far larger company in terms of revenue, and Atlas has maintained its lead quite consistently. Ingersoll did narrow the gap somewhat in 2020, but this was due to a merger. But in organic terms, the revenue gap between these two players has remained unchanged. Third, in the last chart, you can see that Ingersoll Rand has much higher leverage than Atlas. In fact, the credit rating agency Standard & Poor's rates Ingersoll's bonds as junk bonds, while Atlas receives an A+ investment grade rating for its bonds. And this kind of limited leverage leaves Atlas with plenty of options regarding future investments. Then what kind of competitive advantages does Atlas have on its side? Well, in the compressor business, Atlas's competitive advantages are linked to reliability, scale, and technology, we believe. First of all, compressors are often critically important equipment for industrial customers, which puts reliable manufacturers like Atlas at an advantage. The compressors they're like the heart of the factory. They power various equipment with the compressed air that they produce. So a faulty compressor would bring a production halt to a factory, and a poorly maintained compressor might even spread impurities to the manufacturing equipment or even to the end products. So reliability is indeed very important. Second, Atlas's large-scale business has also led to a leading installed base in this field, and a dense installed base allows Atlas to offer maintenance services more efficiently than its competitors could. And third, energy efficiency is really important for Atlas's customers, and this benefits technological leaders like Atlas. For example, the US Department of Energy has estimated that over a period of 10 years, some 3/4 of an air compressor's life cycle costs relate to the energy consumption. So as a result, innovations around energy efficiency have tangible value to the customers. Atlas spends more on R&D than its competitors, and the company is indeed a leader in energy efficiency. Now, in the vacuum pump business, Atlas's competitive advantages are mainly linked to synergy and reliability. First, Atlas has synergy in terms of customers. A large share of customers that use compressors in their process also use vacuum pumps. And secondly, there are also synergy in terms of parts and technology. Atlas's industrial compressors and vacuum pumps share a large number of components. Third, related to reliability, well, that is also very important in the field of vacuum pumps as well. And this benefits established players like Atlas Copco. Atlas's vacuum pumps are in a particularly critical role in the field of semiconductor manufacturing, where the manufacturing environment it's extremely sensitive to small particles like dust. Essentially, these vacuum pumps help customers to maintain a pristine manufacturing environment. And then, meanwhile, it has been estimated that the vacuum pumps represent just 2% of a semiconductor foundry's total investment costs. So it doesn't really make much sense for the semiconductor customer to look for the absolute cheapest provider of vacuum pumps, but they would probably rather emphasize quality and reliability and turn to a provider like Atlas Copco. But is Atlas still fairly priced? Well, with our cautious estimates, we see that the share still offers some reasonable returns. Based on our forecasts, the 2025 earnings per share offers approximately 3.7% yield over the current price of the B share. Now, overall, we forecast a modest 3% compounded annual growth rate for the company's total revenue going from 2020 to 2025, while we expect the operating margin to return to pre-pandemic levels. For compressors, we expect fairly modest growth rate at around 2% annual revenue growth. However, for vacuum pumps, we expect much faster, around 6% annual revenue growth rate. And this would be essentially driven by investments in the semiconductor industry. Then, how profitable has this investment been for Sifter Fund? Well, by the end of April 2021, our first investment in Atlas, made in August 2019, had appreciated 79% in Swedish krona and 89% in euros. And in addition to that, Atlas has also offered an average of 2 to 3% dividend yield. Now, over the same period, the global stock market index, MSCI All Country Weight Index, appreciated just 33% in euros. So overall then, we can say that Atlas is a quality company that has been very profitable for Sifter Fund. And we also see a bright future ahead of the company and see no reason to sell the shares at this point. Thank you.